have read somewhere, maybe seen a YouTube video, or even heard from a friend, an associate, that there's going to be big changes in the housing market in 2021, and that there's a housing crisis on the way, and there's going to be this wave of foreclosures. And I don't know, maybe it's just because bad news sells, or bad news is sensational and grabs a lot of attention. So I'm going to go the opposite today, and I'm going to give you the reasons why I don't think there's going to be a housing crisis in 2021. And I don't think we're going to be seeing a big wave of foreclosures as many have predicted. Hi, this is Andrew with the Andrew Smith team at eXp Realty. And how do I know this? I don't. I don't. I can't say for certain, but neither can anyone else that's been predicting the opposite. What I can tell you is that all of the information that we have, based on everything that we've seen so far, doesn't lend itself to that. Not to the extent that there's going to be a foreclosure crisis, as many have predicted. And by foreclosure crisis, we're comparing it back to 2007, 2008, 2009, just to keep some perspective on that. So let me share with you some thoughts so that you can make the decision that's best for you, as that's the only thing that really matters. I've had this question from a lot of potential buyers and sellers over the past couple of months, this uncertainty, this unease. And if you happen to see the real estate market update for November I put out last week, I touched on that again. I'll put a link to it in the description below. But I touched on that uncertainty that people has. It makes people freeze and not do anything. But when we break it down and look at where things are, the information coming out and the actual data that we have doesn't show that we're in for some big drastic change. So let me share some of this with you. Let me move myself out of the way for you. And I'll even shrink myself down here, which I'm sure many of you are pleased about. All right, so this is a slide I actually did for the first time back in September from the bank rate. The COVID-19 pandemic will lead to a rise in mortgage defaults and foreclosures. Okay, it looks as if foreclosures will form a trickle rather than a flood, housing experts say. So point number one, what I want to preface is that I'm not saying that we aren't going to see foreclosures in 2021. We see foreclosures every year, regardless of how good or bad the housing market is. But the wave and the flood that many are projecting is what I don't see. And here's one of the reasons why I want to share with you. Okay, so this is a look at the foreclosures in the United States going back to 1999. And this is looking quarterly. So the foreclosure crisis, as you can see, is outlined in red here. Okay, you can see quarter two, 2009 was the peak of it. When in that quarter, we had 566,180 foreclosures. Okay, so you can see where these lines are over time. When you average all of these together, there's about 206,000 foreclosures a quarter, all the way back to 1999. So look at quarter two, 2020. Okay, there were 23,900 foreclosures. Yes, a moratorium went into effect, which said the banks couldn't foreclose. That's why the number is down. But even if that comes back, even if it goes up 9 times, we're only there back to the level that's been averaged going all the way back to 1999. Even when you look at the total number of homeowners that entered forbearance and those still in forbearance, which I went into in detail last week, we are nowhere near the numbers that you see during the foreclosure crisis. So will there be foreclosures? Yes, but this just shows that there's foreclosures in every market. They're always a part of our market, unfortunately, but it's not the overwhelming wave that some have been predicted. One of the reasons for that is the market itself. Back in 2008, 2009, home prices were declining. We had an oversupply in many markets, forcing pricing down. A lot of homeowners had no equity whatsoever, zero. And as a result of that, we started to see strategic defaults, people that could make their payment but chose not to because it was no longer a wise business decision. It didn't make sense for them anymore. They were better off just walking away and getting rid of that, underperforming asset, so to speak. Aspen Growth Solutions recently touched on that. And they said, unlike in 2008, strategic defaults have not emerged as a serious problem and seem unlikely to emerge given stronger expectations for property price increases, record low inventory, and stable residential underwriting standards leading up to the crisis. Now, those stable underwriting standards, that's something we've touched on before. If you look at it, for anyone that's bought a home or tried to refinance, all of those creative financing loans are gone. They don't exist anymore. There's product risk and there's borrower risk, right? Product risk is when some of the lenders come out with a riskier product in order to do more loans. There's virtually no product risk in the market right now. None. Only borrower risk, which is greatly reduced from where it was. So again, if we look at it here, in the first half of 2010, 1.65 million American homes went into foreclosure. In the first half of 2020, barely 165,000 loans were hit with foreclosure actions. So even if defaults rise dramatically, they'll still remain well below the levels we've seen during the mortgage meltdown. So that's important for anyone considering buying or selling. There are going to be foreclosures, but is it going to be catastrophic? No. Is there uncertainty? Yes. But why has the stock market gone up recently? For any of you that have been watching, the Democrats were expected to gain seats in the House. They didn't. The Republicans gained 12. In the Senate, right now, it's still not decided, but it looks as though the Republicans are going to keep control of the Senate. Even if when all of this finally shakes out, we end up with a Democratic president, Wall Street is moving up because they're banking on gridlock. There isn't going to be any major change that they're forecasting. Now, cases of the pandemic are going up, but we're also much closer to a vaccine. Could that have impacts on the economy? Sure, it could. But no one that I know is a fortune teller. No one knows exactly what's going to happen. But based on everything that we do know, it's not likely that you're going to see some massive change in housing. Again, what we're looking at right now is supply and demand, really taking control of where we're at. So we look at this month's inventory of homes for sale. You can see here back in 2007, 2008, 2009, 2010, we were firmly in a buyer's market. There was a lot of homes on the market for sale. Now, anything less than 6 months is considered a seller's market. Again, in last month's real estate market update, the three markets that I work in, Frisco, Texas, Prosper, Texas, Southern California, Temecula, looking at those, and those are very similar to other markets around the country because I'm right now talking and helping people purchase property in Idaho. I just spoke to people in Florida. I just had a conversation with someone in North Carolina, and they're all reporting the exact same thing. A lot less inventory than that. Here locally, we're at about a month. 1 month worth of inventory to 1.3, about 1.5 months worth of inventory in Temecula. So a far cry, low supply, high demand, prices go up, right? So it's just simple economics there. So what about that demand? Okay, well, here's the interesting thing. Yes, if something unexpected happens, demand could wane. That's true, but it hasn't. Who would have known that the pandemic would have such an effect on housing that it has? But here's what we are finding. People are determined or have seen that working from home is becoming the norm. It's not likely that we're going to go back to the way things were from a work perspective for quite some time, if ever. The work from home is here to stay. Companies are realizing that there's a massive cost saving in not having huge facilities all over the place and that they can have smaller facilities and do more remote work. Upwork recently did a study, and based on remote work, they did this study and they found the responses that they got back was 14 to 23 million people are projecting that they are going to be moving directly as a result of the remote work possibility. 41.5% of those surveyed indicated that the place they were considering moving was more than 4 hour drive from where they currently live. Just think about that for a minute. Think about how many people that is. Let's put it in perspective. Right now, we're on track to sell about 6 million homes annually in this country. 6 million. If 14 to 23 million more people are considering moving, that's an awful lot of demand. Will all of those come to fruition? No, absolutely not. They won't. But even if half of them do, that's still a boatload of properties, an awful lot of properties. I was recently talking to a real estate associate friend in Maui, and he was telling me that you can't find a single family home right now at all. I'm like, why is that? He goes, California, Silicon Valley. A lot of the tech people are getting out. They're moving and they can now work remotely. They're setting up shop in Maui. If they can work from anywhere, they're going to choose anywhere and somewhere different. So again, that's just my 2 cents on it. Could I be completely wrong? Absolutely. But I just want to share this to give you a different perspective on some of the information that's out there. It's doing nothing but spread fear. Again, with this information, it's my hope that you can make the best decision for your own situation, as that's really what matters most, that you make the best decision for you. If you've got any questions about this or anything else, please feel free to reach out. I'm always happy to share my insights with you and give you hopefully another perspective so that you can make that best decision for you.